Chris, it's great to have you back. So let's start with the expirations we're seeing. What should we expect?
Okay, so like you said, biggest expiration of all time. January is always going to be the largest because those options are listed the longest. But this January is about 14% higher than last January. Single stocks, like you mentioned, over 20% more. The biggest question that we're being asked right now is how much is options expiration contributing to the sell-off? We don't think it's a primary driver. Does it exacerbate near-term swings and can it contribute to to intraday volatility? Sure, but it's going to have less impact on a day-to-day market reaction. It's just going to kind of exacerbate the moves a little bit. And then when we're talking about the total notional size, just keep in mind, so many of the upside calls on the equity level are now out of the money, so they're going to have a little bit less of an impact. And maybe a reason to stay away a little bit from the notional calculation when considering how much impact those are going to have.
Sure. So I can imagine, it's always like this. The experts see a number like 3.3 trillion, they roll their eyes, and they're like, this is not what we're talking about. But are you saying this is potentially opportunity? So if because of technical reasons we're seeing outsized moves to the downside in single stocks, ETFs, mutual funds, the market, does that present an opportunity?
I mean, very, very near term. The day-to-day, week-to-week sell-off right now, that's not really being impacted too much by options or options expiration. Now, what you alluded to earlier in terms of opportunities, last week we talked about we were kind of surprised, a little bit less volatility being priced into the market than we were expecting given the sell-off where we were last week. We were looking for a couple of our key capitulation indicators. That would be term structure of volatility in the NASDAQ, SPX, and the VIX inverting. So what does that mean? That means the very near-term volatility levels spiking up above the medium-term volatility, like 90-day kind of volatility. What that's going to tell us is the stress is being priced into the here and the now, and that can be a sign that we're in the later innings of the selling. We did not see that last week. We are seeing that this week.
Oh, interesting. Okay, so I was going to ask if we're at that point yet. So you are starting to see, reminds me of commodities, what do you call it, backwardation or whatever. But yeah, so are we at that point now? And usually what inning does that mean we're in for a sell-off?
So if you look back over the last 15 years, it's been a very good indicator. If you look back, when has it missed? Great financial crisis, COVID crisis. So the question you have to ask yourself is, are we in the middle of one of those events that we're going to be talking about in the financial history books going back, over the next 10 years? Or are we in more of the typical 5 to 10% once or twice a year type of pullbacks that we normally see every single year? That's the major question.
And is there any other data that you're looking at right now to kind of give you a feel for which one of those camps we might be in?
So personally for me, the reason we're selling off, it's not really an unknown. The Fed is going to start raising rates and pulling away some of the easing. This is not a unknown, and it's not something that has never happened in the past. So typically when the Fed starts raising rates, the market gets a little bit shocked. Medium and longer term, it starts to rally. That's more anecdotal. When we talk about the other notable thing we're seeing right now, it's very dramatic intraday volatility, much more so than day-to-day volatility.
And what does that tell you as a final question? Because it's been pointed out by several people, even last hour, it was, their oil guest had such a great way of summing this up, saying that usually we see equity investors buy the dips and not in the commodity space. And lately that's been reversed, where the markets are behaving like the other one. What does the intraday swings in stocks right now tell you?
So we're seeing these big intraday swings. We're trying to go back historically and look for some parallels. What's really amazing is almost all of these intraday swings, the size of them, have happened since 2018. That's been when buy the dip has been a pretty big mantra. That's when we maybe see a little bit more option trading for these gamma hedging type swings. So, we're only really seeing these types of swings in the very recent history. Buy the dip has dominated the very recent history. Once again, we got to decide, is this time new? Or is this the same playbook as before? I'd lean towards the same playbook.
All right. Well, we will check in with you in case that changes. Chris, it's great to have you on today. Thanks so much.
Shepard Smith here. Thanks for watching CNBC on YouTube.